So, my name is Tracy. I'm the customer success manager here at Down Payment Resource. Lori is also on the call with us. So, she's the main point of contact for you guys over there at FMLS. So, let me go ahead. I'm going to share my screen now and get this deck going here for you. So, give me 1 second to get all this moved around here. Perfect. Perfect. Okay. So thank you all again for joining us today. What we're doing today is we're going to talk about the basics of DPAs. We really appreciate this opportunity to speak with you about all this and to talk about what DPA programs have in common, how they're different, and what you need to know to start conversations about down payment assistance without really being a program expert. The goal today is for you to leave the webinar feeling more confident, competent, and more comfortable talking about and working with homebuyer assistance programs like down payment assistance. But first, I want to tell you just a little bit about who we are in case you're not familiar. Down Payment Resource was launched in 2008 to solve a problem that really drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer programs. So DPR developed an easier way to connect eligible borrowers with hard to find resources like DPAs, grants, MCCs, and other assistance. We provide tools and down payment assistance program information for our real estate agents, loan officers, and ultimately consumers as well to help all of you guys find and understand the down payment solutions that are out there for your buyers. Ultimately, we're here to help you connect home buyers to the down payment help that they need. So today we're going to discuss the basics of loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, cover their closing costs, and get them into a home sooner than they would have been able to otherwise. Of all the programs out there, 74% of them are some form of down payment or closing cost assistance. That is really a catch-all category, though. So keep that in mind. And we're going to dig in deeper in a few minutes, but it is important to know that not all DPAs are the same. So, for example, 80% of them have deferred payments, which mean you don't have a monthly payment on the DPA loan for some period of time. 54% of them are forgivable, either in part or in full, which essentially makes them become a grant over time. And 52% of them are both deferred and forgivable. And then there are still other DPAs that are either true grants at closing or are repayable monthly after closing. And we're going to break these down a little bit further, as well as the affordable first mortgages and tax credits or mortgage credit certificates in just a few moments. I do want to let you guys know that these programs are everywhere. It is a very common myth where people across the country think that there are no programs in their specific area. However, that is not true. There is at minimum a state housing finance agency in every single state, and those programs for that state HFA are available statewide. So there is literally no county or market in the country where there isn't at least some kind of down payment assistance or other home buyer assistance programs. So let's talk about who funds and administers these programs. I mentioned before, every state has at least one housing finance agency, like Georgia Department of Community Affairs, who offers programs in Georgia. In addition to the state agencies, there are city and county governments that often have community or economic development departments or housing authorities. And a number of nonprofits like NeighborWorks, Neighborhood Housing Services, and others operate in markets across the country with varying programs. There are also many employers like municipal governments, hospitals, and universities that also offer their employees down payment assistance. And then there are community action agencies, land trusts, and so many other organizations out there that are all trying to open new doors to home ownership and promote housing growth and responsibility in their market. So let's take stock of like the current DPA trends in the US. So currently demand for DPAs is through the roof and it has been for quite some time. That's a trend that we've been seeing consistently. increasing over time. DPA providers are increasing their assistance amounts, the income limits, and purchase price limits to help more buyers in today's market. Um, and the DPA providers are expanding their eligible uses of funds as well as the inventory options. In fact, our recent study showed that across the US, there have been a total of 170 new programs added in the last year. Well, I should say from the end of 2023 to the end of 2024. So that year's time frame, because these were the stats that we pulled. We do have some more stats that are going to be coming out soon for Q1 of 2025, but those aren't available yet. So that's what I'm going off of with that. But because of that, that shows that new state and local programs really are continuing to launch in markets nationwide. And currently, about 81% of all DPAs are funded and available. So there's so much more attention on affordability and down payment assistance now than in many years. And these programs are widely available and they're not going away. So now that we've talked about nationwide, let's look specifically at what's available in your market. And I just, by the way, pulled these stats this morning, so like an hour ago. So they're very current and accurate. Currently, in Greater Atlanta, we have 78 programs. 76 of those, so only 2 are not funded, but 76 are funded, and they come from a total of 41 agencies. The income limits currently can go up to $207,000 statewide. And the purchase price limits can go up to $806,500 or higher in some situations, which we'll talk about in a minute. The down payment help can range from $5,000 to $30,000. Also, there are higher options as well for that in some situations. Of all of the FMLS listings, currently 86.9% of them are showing as being eligible for down payment assistance. That is such a huge percentage of your listings. So this is widely available in your market. And that is a common percentage, by the way, for you guys. You guys stay steady at this kind of an average range of listings that are eligible for DPA. This is not just a today situation. So keep in mind that the prices can be higher in some targeted areas. So these numbers I'm giving you are just for single unit properties. There are some programs out there that will support multi-unit properties as well. So in those situations, it will be higher in most cases. It's also tough to get an average assistance amount, as there are some programs out there that offer a percentage of the sales price as their assistance amount. It's not a flat amount, but a percentage. And then when we refer to eligible listings, it's important to know that both the property and the buyer must qualify for down payment assistance. For us to determine that eligibility, what we do is we look at the property location and the sales price and then compare that to the coverage areas and the sales price limits for programs in that market. So, like I said before, this is a huge volume of your for sale inventory that's eligible for DPA. And that is because these sales price limits are flexible in your area. Of all of these programs, they share some basic universal requirements. So, for example, they are only for owner occupant buyers. These programs are not for vacation homes or investment properties. Although, like I said just a few minutes ago, in some markets, there are programs that are available to buyers who are wanting to purchase multi-unit properties. It can go up to 4 units, and they do generally require that the buyer occupies at least one of those units. So it has to be their primary residence. They do all still require some minimal investment from the buyer, but this can be a monetary investment, which could be like 1% of the purchase price, or maybe a flat rate of like $500 or $1,000. But the buyers are also investing time, specifically by completing their home buyer education course, which buyers typically have to complete in order to qualify for a DPA. Those courses prepare them for the home buying journey and also for successful long-term home ownership. And we're going to talk a little bit more on those home buyer education classes a little bit further down in this slide deck. And of course, keep in mind, these are not cash buyers. We're talking about buyers who are financing their home with a mortgage. So obviously, they have to qualify for the mortgage as well. So, with those universal requirements in mind, now let's take a look at the three most common types of homebuyer programs and what's unique about each one of them. The three most common types of homebuyer assistance programs are the down payment assistance program, affordable first mortgages, and mortgage credit certificates. There are variations and certainly many other names for each type of program. And that's kind of what we're going to clarify a little bit as we learn how each one of these works. But remember, as we go, no two programs are exactly the same. But we're going to learn the basics today of each type so that you can understand at a glance what your options are. So, first, let's review down payment assistance programs or DPAs, as they're referred by. And as we saw earlier, this is about 74% of all homebuyer assistance programs. So this is the majority of them that you're going to run across. Down payment assistance programs, like I said, are the most common type of homebuyer assistance in most cities. Every state has that housing finance agency, which is the housing division of their state government, and just about all of them have some form of down payment assistance program, as well as local government and nonprofit program providers who offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. So, grants are gifts that do not have to be paid back at any point. So, they're just a gift at closing. These are going to be really easy ones to work with. Then there are repayable seconds. These funds are provided at closing and they may or may not accrue interest. And the loan could range anywhere from like 5 to 30 years, and they do have varying repayment terms. Then there are deferred or silent seconds, and repayment of the original amount on these is postponed until one of several events occurs. Commonly, it's when the borrower sells or refinances the mortgage, or there's a change in occupancy, meaning that they no longer occupy the property as their primary residence. Up next, we have the forgivable seconds, right? So this is the last of the four types. Some or all of the original down payment assistance is forgiven in these cases. Often it's a percentage of the loan that's forgiven each year for a predefined number of years. So let me give you an example. It's common for a forgivable down payment assistance program to be forgiven 20% per year each year over the course of 5 years. So these are the four types of DPAs when it comes to repayment terms. Now let's talk about how this money can be used. Of course, the most obvious use for these funds is to increase the down payment. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses, or even property repairs, which can be particularly important to enhance a property or accommodate livability standards for disabled buyers. And it can also be used for loan principal reductions. Also, more recently, in the last couple of years, we have seen DPA providers starting to allow their funds to be used for temporary or permanent interest rate buydowns, or even to help reduce mortgage insurance costs. And all of these uses end up helping the buyer to reduce the cost of purchasing and financing a home. One of the most common misconceptions out there about down payment programs is that buyers must be first time buyers. However, there are about 2,400 programs across the country that we maintain in our database, in our down payment resource database. And we have stats in here that show that 39% of them have absolutely no first time homebuyer requirement. Beyond that, most programs do adhere to HUD's definition of a first time homebuyer, which effectively states that you're a first time home buyer if you haven't owned a home in the last 3 years. So, meaning somebody's a homeowner and they end up renting, an apartment for a few years. Once they've gotten past that 3 year mark, they haven't owned a home for 3 years, they're considered a first time home buyer for purposes of down payment assistance. So keep that in mind when you're talking to some of your buyers. And there are also still more exceptions to that rule for like widows, divorcees, displaced homemakers, and some other circumstances out there where they adjust that. But in just about every market across the country, we see programs that waive that first time homebuyer requirement in targeted areas. And they make exceptions for veterans or certain professions, or like we said before, you just don't have to have that requirement at all in some of these programs cases. And while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash up front and along the way for other homeownership obligations. Many of these programs are grants, which, like we said before, it means that they are interest free, payment free gifts to buyers who meet the eligibility requirements. Others may bear interest but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So, for example, many stipulate that the buyer occupy the property for a certain number of years. It could be 3 years, 5 years, 7, 10 years. But once they meet that stipulation, the lien is forgiven, which essentially makes it become a grant over time. For those programs, though, that are not grants, many will take a second or third lien position to allow for layering of assistance as well. So keep that in mind too. Now, let's talk about the eligibility requirements. Most DPAs have some basic qualifying requirements, and really these are typically the same for the affordable first mortgage programs and also the MCC tax credits that we're going to look at in a few minutes. But eligibility depends on the program and the funding sources. Income and purchase price limits are always market adjusted, and they're often based on calculations for the area median income, which is the average income of the market. But basically, all of them have income limits ranging from 80% all the way up to 140% of area median income, and sometimes even higher, which can creep into those like six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. The location of the property is also critical, as each program, especially at the city or county level, offer assistance but within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance statewide, which cover that entire market and aren't bound by those city and county limits. There are even some nationally available programs that we track in here as well. Some programs have more of a needs-based eligibility criteria that involve an evaluation of each buyer scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements. So, as an example, like a FICO score of 620 or higher, and things like that. Homeownership history does make a big difference too, because there are many programs out there that are only for first time home buyers. But as we stated before, there are many as well that are for repeat buyers or even current owners too. And like I said before, remember a first time home buyer is simply someone who hasn't owned a home in the last 3 years. I'm going to expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. So make sure you're keeping your ears open for any clients that you're working with that may have military service or certain kind of hero type professions, core professions. But ultimately, these programs reduce the buying cost for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out of pocket expenses and retain their liquid savings. So, as an example, let's think about someone obtaining FHA financing with like a 3.5% down payment. If a DPA program helps them bring more to the table and instead qualify for a conventional loan at 5% down, what this does is it effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs, which last the life of the loan. Whereas Conventional mortgages have no upfront mortgage insurance premium and lower MI premiums that can be canceled once the buyer gets to 80% loan to value. When you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home that they like, and in some cases, qualify for like a little extra home to suit their family's needs. Increased purchase power really does offer a competitive advantage. And of course, reducing monthly payments also allows for a little extra cash every month for them to dump into savings, which really has been shown to reduce default rates. Many down payment assistance programs require the buyer to complete a homebuyer education course, which provides valuable information about the home buying process and resulting responsibilities of homeownership down the road. But this better prepares potential buyers for the obligations they face as owners and the steps that they're going to have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. More and more down payment providers are offering these courses online for their home buyers. And the course content is typically HUD certified home buyer and homeowner material. And most courses are simply an 8-hour class that can be completed like on a Saturday or Sunday, or even broken up during a few evenings of online sessions at the consumer's discretion. But this allows the buyers to work ahead towards down payment assistance pre-approval so that they can hit the market as more competitive and informed shoppers. And if they already have this done, which by the way, this course certification is valid for 1 year after completion. So if they know they're going to be utilizing down payment assistance as their agent, I would suggest recommending that they go ahead and get this course done so that they can have it in their back pocket and they can strike faster when a property comes available and not have any kind of a holdup for them to finish that course. So now that we've reviewed the down payment assistance in detail, we're going to look at another one of the most common homebuyer programs, which is the Affordable First Mortgage. The Affordable First Mortgages are additional mortgage options typically only available through a state or local housing finance agency. And the most common benefits you'll see are below market interest rates, reduced mortgage interest costs, and allowances for higher loan to value or LTVs. So, for example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance, so below a standard conventional product, all with a higher LTV. You can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those housing finance agencies. Affordable first mortgages help further reduce the cost of home ownership for new buyers. Lowering monthly payments through lower rates or MI pricing helps increase the purchasing power of each buyer and can potentially expedite home ownership for them, which gets them into that home sooner than they would have otherwise been able to do. So now let's look at the third of the most common homebuyer programs, which is the mortgage credit certificate. The Mortgage Credit Certificate, or MCC, is available from state and local housing finance agencies in some states. Now, these aren't always available. So there may not be some available currently at this time for you guys, but it is so important to be aware of these types of programs because when they are available, I definitely suggest making sure that your buyers utilize these. This type of DPA, what it does is it offers a federal income tax credit of up to $2,000 per year. Eligible buyers do have to qualify for an MCC prior to closing. They cannot add it on after they've closed. But the cool thing is when they are able to use these, they get to use it every year for the life of their mortgage. So 5 years, 10 years, 15, 20 years down the road, right? And the MCC tax credit helps offset part of the mortgage interest cost, and then they still get to deduct the rest of the mortgage interest that's paid each year. The buyer will likely still have to complete a home buyer education class for these as well, and of course, qualify for their mortgage. But these are such a great benefit, these MCCs. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. For mortgage interest paid, I was getting tongue tied there. Some MCC providers will allow the lender to take the MCC credit amount and annualize that over a year and then use that annualized amount as an increase to a buyer's qualifying income. That can really make a big difference when qualifying. And some MCC providers will also reissue an MCC through a future refinance. So let's take a look at an example of how MCCs work. So if you take a $200,000 home, the buyer closes and makes 12 payments in that year. They paid 4% interest, so that's $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit. So $2,000 in this example. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction. So this happens every single year, which is so cool. We absolutely love MCCs. So now let's continue this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or unique benefits for your clients. There are many programs that offer additional incentives to buyers purchasing in targeted areas. These are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town that are really in most need of community investment. Typically, there will be no first time homebuyer requirement for these, and the assistance amount is generally increased, and the income limits and sales price limits are often higher as well. The idea with these is to promote home ownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas really are all over the map, not just in big cities. And targeted areas are usually bounded by specific cities, zip codes, census tracts, or maybe sometimes even entire counties. There are also programs available in many markets that target certain professions, which are typically teachers, educators, police officers, firefighters, your healthcare workers, and municipal employees. But the idea behind these programs is to enable homeownership among those local core service providers. And many of these programs have very broad definition of terms like educator to include not just classroom teachers, but public school system employees at large, such as paraprofessionals, librarians, school nurses, and things like that. Or, as another example, protectors could include police officers, sheriff's deputies, correction officers, probation officers, and more positions. So keep those in mind. Yet another targeted audience of eligible buyers is our armed forces, active duty personnel, and our veterans. There are so many programs out there that waive the first time homebuyer requirements for veterans. Some even offer higher assistance amounts too. And many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little bit more flexibility to become buyers despite homeownership history. Some of these programs offer the same or similar incentives to active military and guard or reserve members. And honestly, just what a great way to just say thank you for your service. So make sure for these special use case situations, anytime you're working with a buyer, keep these in the back of your mind that there may be above and beyond the addition or above and beyond the uh, average programs that are out there, there may be more that are specifically available to them in their cases. So I gave you a lot of information today for sure with these, but to help you get comfortable with DPAs and to kind of have a little bit more knowledge with homebuyer assistance programs, but I also want you to know how to access these tools once we leave the webinar. All right. When you are logged into Matrix or Paragon, make sure to look for our down payment resource button on eligible listings. But essentially, you'll see these down payment buttons on agent reports as well as in your client portal. and make sure to click on it. And then we're going to be able to tell you or your client which programs are available for the properties that they like the most. And I am going to show you some screenshots here so that you know what it looks like. Um, because although we're going to dive into this more in the next webinar, I just want you to have a look at how it's displayed in your systems. In Matrix, here is what the icon looks like in the agent single line view. And sometimes it may be that you have to scroll over to the right to find it um, because it may be off screen depending on your screen size and all of that. So just keep that in mind. But on any eligible listing, you can click on that down payment button to view the programs that the property may be eligible for, and also to see who the participating lenders are, how to complete the homebuyer education class, and so much more. Here is that same button on the agent detail view in both Matrix and Paragon. And the same thing here. If you click that down payment button, you're going to see all the available programs in those details. And your clients can see this information too. So when you send them listings, they can see if the listing they like is DPA eligible. They can use the tool to enter a little bit more about themselves and see what both they and the property are eligible for. Because flashing back to the beginning, like I said, DPAs, the property and the buyer both have to be eligible for the program. So what's integrated in your listings shows specifically if the property is available, but then that buyer has to put in a little bit of more of their information to make sure that they qualify and are a good match with the requirements of some of these programs. We also have what we call our down payment resource dashboard, where you can access all of our tools and resources, including Down Payment Connect. We are going to discuss this as well a little bit further in our next webinar, but that dashboard is accessible from the Matrix homepage under external links and in Paragon under resources. And you can also, when you're at your MLS dashboard, you can get to the down payment resource dashboard under product directory. Okay, so now let me move on to this. So that's just a little bit of how it's integrated within there, but I do want to let you know a little bit about Down Payment Connect. I do want to make sure you know it is completely free for you as FMLS subscribers because of our partnership with FMLS, and it is ready for you right now. So if you're not utilizing it now, you can log on. It's set up for you. All it needs is for you to go and find that link, which I'll show you what that looks like in a moment, and you can start using it immediately. But you get your own DPA search landing page for consumers so that they can fill out that eligibility search information for the area that they want to buy a home. And then those leads get directly sent to you, which helps you to kind of continue that home buying discussion. So you don't have to turn it on. You don't have to do anything to activate it. You don't have to pay for it. It's free. It's just waiting for you. And then Down Payment Connect, this is what it looks like right on our screen here. This, when you go to your Down Payment Connect page, that's kind of going to be what it looks like. It allows buyers to complete a program search from your personalized link. And then you can then generate leads by engaging and educating new buyers about the down payment assistance programs in your market. And you can use your Down Payment Connect link on your website, email, marketing, all social media. And like I said, in that further webinar that we're going to do in a few weeks, we're going to dive into that a little bit more. But just to be clear, you're not buying leads with Down Payment Connect. You're just taking advantage of our unique DPA eligibility platform to generate your own leads. And nobody else gets your leads. It's just come to you. So their information's not sold. Nothing happens with that. It's just a way to receive some of that information. So I encourage you to get creative and reach out to more buyers and educate them on these opportunities. And I'll show you some examples in our next webinar about how to do that. I do want to let you know about our Facebook group called Down Payment Insiders. One of the most common questions that we get from agents is, how can I find a loan officer or a lender that works with down payment assistance programs that I can work with, right? And this is such a great place to start that conversation, because you can join over 14,000 real estate agents, loan officers, housing counselors, and even DPA providers that are members of ours on this page. And they discuss best practices with DPAs first-time home buyers, working with lenders, learning from each other, marketing ideas. So much happens on this page. So it's up to you. You can listen in and learn, or you can participate in the dialogue and engage with your peers also. But it is such a great place to network and connect with loan officers that offer DPAs in your market. We see it happening every day where an agent will just say, hey, I'm looking for a loan officer in the Atlanta area that is familiar with DPAs. And then you're going to get some comments, I'm sure of it. So I do want to leave you with a little case study that illustrates how important down payment information is for realtors and home buyers. Amber here was a new agent in Florida, and no one was helping her peers to understand how down payment requirements work. So many of them began, and as they began to explore homeownership, she decided to step in. She learned a lot about DPAs and kind of built it into her business to serve those same buyers, right? So I just suggest, you don't have to be an expert in DPAs, but become familiar enough with them that people know to come to you for help with that, that you have an extra tool in your pocket that can help them get into a home. And really, I do want to note that DPA customers truly do become customers for life. And I highly suggest telling their stories, whether it's in person with future buyers or promoting it on your website or social media. But that's a great way to drum up business. When people see that you're able to get somebody else into a home that didn't think they were going to be able to, and you made that dream a reality just because you knew that there's down payment assistance programs out there and help them connect the dots and, get that information to their loan officer, you become that hero for them. And we see it day in and day out. So make sure to help them. And I guarantee you, they're going to refer family members, friends, everyone that they know all the time. So lastly, I want to leave on the screen here our contact information. I know you have Bethany's information and internally with FMLS, but if you guys ever need to reach out to us with any questions, Lori and I and the rest of our team, we're always happy to help you. So you can reach us at info@downpaymentresource.com with any of those questions after our session today, if anything else bubbles up. But let me go ahead. I'm going to keep this on the screen for just a few minutes, Bethany, just in case somebody needs to copy that down. And Lori, if you don't mind, can you throw that in chat? Like just put it in chat so that people can copy it that way as well. But have there been any questions in the background that I should answer? Or Bethany, do you have anything else to add? Or
So I just opened the chat. So Lori, you should be able to add that in the chat now. And we have had a Q&A window open this whole time, and I don't have any questions that have come on. So the chat's now open. If you want to throw questions in the chat, you can. Lori will have that information in for you there in just one moment. Oh, it's there right now.
Perfect. Thank you, Lori. Okay, well, anybody can chime in. If you have questions, you can unmute as well. I don't know if everybody has the ability to unmute, but if you do, you can unmute and just ask or drop it in chat or Q&A and let us know.
Hi, I have a question.
Yeah, hi, Myra.
For the houses that are available for down payment assistance, is the house attached to the assistance? Like me as a realtor, if I put a listing, how would I know that the house is good for down payment assistance, for instance?
That is a great question. That is such a great question. So if a property is available, has down payment assistance available, that property will have it, right? Like it's just set to the property. It means it has met eligibility requirements based on the program provider with the purchase price, with the location, and some of those other kind of little factors that go into place there. So no matter what it is, and you can definitely market that. So if you, and I highly suggest this, and I'll talk about this in the next webinar as one of the examples that I give, is that if you are a listing agent and you're putting a property out there, by all means, promote that down payment assistance is available at that property. And I'll show you how you can find that. But basically, if you look in your MLS and you look at at any listing, whether it's one that you've put in or someone else, and you see that DPR logo, that money sign logo, that means down payment. At least one down payment program, and many times multiple down payment programs are available at that property, and you can promote that. So you can promote it for your own listings, or also if you have a buyer that you know is needing to use down payment assistance, keep an eye out for those icons so that you can see that. One thing I do want to note is that our system, the way that we flag these listings is we do a nightly pool of data collection. So if a new listing gets added on today, you're not going to see that icon until tomorrow, once our system has been able to process it overnight. So keep that in mind with brand new listings. But I will be able to show you on the next webinar, because I'll be able to bring up Down Payment Connect and show you. But there is a way when you're logged into Down Payment Connect. Actually, I'm going to speed past here. I'm sorry to do it crazy fast here, but I want to get to this slide and show you this here. On this tool, there is an eligibility lookup. Do you see that on the screen where it's got the magnifying glass and it says eligibility lookup? When you're logged into your Down Payment Connect, if you have your own property that is just listed today, so it's not flagged yet, or you're working with a home buyer and you're trying to figure out that initial asking price, and kind of play around with what you're going to start it off at, and you want to see if it qualifies for DPAs, you can come in here, click on that eligibility lookup button, type in the address and what that asking price is, either that you're thinking of or that it's out there with right now, and you're going to see immediately what programs are available at that property. Right. And this is just for you. This is your view. So as an agent, you'll be able to see that, not your buyers, until it's flagged with it. Okay. Yeah, my pleasure. Any other questions? I'm going to get this screen back up here for contact information.
There was one more question. Kevin came and put a question in the Q&A. He says, if there is a program that runs out of money, how long before it's pulled from the list?
That is another great question, Kevin. And I will say that we get this question from loan officers often, but I have never had an agent ask me this. So kudos to you for thinking about that. What we do in our portal, you will see with the eligibility search, when those leads come to you from your buyers, if a program is out of funds, it's going to be flagged with a big red bold out of funds, so that they know that that program exists, and you know that program exists, but it's not usable right now. However, we keep a program in the system for a few weeks, at least like a month or so, for any loans that are in existence, because we have lenders that use our tools as well. So any of those lenders that have that attached to a loan file, so that they can finish out the loan process that's actually using it, we leave it in there for a little while. If it's not going to be funded again, we remove it entirely after we've given them just a little bit of time to do that process. However, if it's expected to be refunded at some later time, it's going to stay in there, and it's going to have that flag that it's out of funds, so that you continue to know. And then the second that we have that funding update, we're going to remove that flag, and it's now just going to be shown as an available program when it's funded. Great question. So on the next one, this today was mostly just about making sure you guys had an understanding of DPAs. The next one, we're going to dive more specifically on how to find and use the tools. I showed you some of that on here today just as a quick glance, but we're going to dive deeper into that. And I'm going to dive deeper into showing you examples of ways in which you can utilize your Down Payment Connect tool for those leads and stuff like that as well. So if you have any questions or you're interested in joining us next time, please do so. We're going to do a lot deeper of a dive into your tools then.
All right, perfect. Well, thank you, both Tracy and Lori, for joining us today. We are super excited to have you and glad to share this information with all of our FMLS members. And thank you, members, for joining us. Have a great Friday. Thank you all.
Bye, everyone.
Bye, everyone.